Hey there, traders. Welcome to the Benzinga first ever 10-minute trading live stream. Hey, before we get started, be sure to smash the like button. Make sure I can roll that little thing that says, hey, smash the like button here. And get ready. We're going to talk about what's in my current portfolio, some new stock picks we could talk about today, and be sure to stay till the end where we're going to be doing some audience requests. So let's get started.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell.
Hey there, traders. I'm Christopher Ewell. Just to give you a little background on me, this is my first time on Benzinga. I've been trading since 2009. I started the website 10MinuteStockTrader.com, and I'm also the host of a top 10 iTunes investing podcast called the How to Trade Stocks and Options podcast. We have over 500 episodes, and you can find that on YouTube. Just type in my name, Christopher Ewell, and I'll be right there. I've also been very fortunate to be awarded top 100 people in finance for 2 years in a row. And I'm on TV a couple times a week giving my perspective on the markets. And now it's my first time on Benzinga. So the way I came up with 10MinuteStockTrader.com was that I had to learn how to trade at work. And I think a lot of people have a similar story as me. I had to actually buy an iPad and get a data plan. And I'd bring a backpack every day and I would pull out my iPad and just figure out how to do it during the day. And really, I only had about 10 minutes a day to figure this out underneath my desk. And that's how I came up with 10MinuteStockTrader.com. And this caused me to build systems and processes. That way I don't have to spend hours in front of charts every day. And I'm sure that sounds very appealing to you, right? And I always focus on high probability options setups. Speaking of setups, let's go to the charts and I'll show you my chart setup here before we get too deep. Hey, real quick, smash the like button. I know I haven't said it enough yet, but that's something we need to do around here. We need to smash the like button. So let's talk about how I break down my charts, and that'll help you understand as we get going into here. The purple line is our 3 exponential moving average. The gray line is our 5-day. The blue line is our 10-day. The black line is our 20-day. And this red line here is our 50-day. And below these guys down here, that's our 200-day. And finally, you'll notice there's one that kind of drags along the top. That is a 2 ATR channel above the 20-day exponential moving average. And I mean, the first thing people always ask me whenever they start trading with me is, hey, how do I know when a stock is not too far? How do I make sure I don't buy something that's extended too far? That line right there that you can put on in pretty much any platform is going to be so helpful to you. I mean, a real quick rule of thumb for me is if it's above this 2 ATR, that's 2 average true ranges above the 20, the black line here. I don't even look at it. I mean, it can run up for a long time, but if you're catching it on the wrong side of that, it can reverse just as fast. All right, so smash the like button if you found that useful. If you're a chart person like me who uses moving averages versus drawing lines on a chart, I tell people on my podcast that I can't draw a line on a chart to save my life. It's more of like just colors on a crayons on a page to me. I don't get it. I don't understand it, but I do understand the moving averages. I do understand data, and that's how my mind works. So first, let's cover the SPY. Today I had a pretty rough day, and we've been seeing more and more of these lately, where we've had these sell-offs coming in and out of the market. Not really sure where this is going to go, but it did bounce right at that 10-day exponential moving average, which tells me the trend is still intact, but it is getting a little bit fragile. So just something to be looking for there. We're going to cover several tools, tips, and tricks to help you trade faster and trade smarter. That's what I always say on my podcast. And the first thing that we're going to do is actually look at my portfolio, the 10MinuteStockTrader.com portfolio. So let's go into that. All right, the first one up in the portfolio, actually, there's 2 tools that we use all the time. First tool you're looking at here is called TrendSpider. You've probably heard of these guys, and I'll show you exactly why I use them in a minute. The second tool I use is called FinClub, finclub.ai. And here it's actually artificial intelligence data that helps you like stay ahead of the market here. There's the momentum sections, which is really, really useful, and we'll be talking about that, especially because utilities, as you can see, compared to everything else, utilities are off the chart. And because of that, I've been putting on a lot of utilities trades lately. And then also, they give stock picks every single day with their, the ETA, the buy price, the target that they're looking to hit. So if this is something you're interested in using, it's called finclub.ai. Like I said, use it every single day. So let's go to our first pick that we put on, Cisco, CSCO. If you have Cisco, do me a favor and smash the like button. It's been on a nice little roll lately. Also, make sure you stay to the end and put in some comments there on some trade ideas that you have. I want to make sure we cover that. That's going to be the third section of the program, is audience requests, and I don't see any requests right now. So what are y'all waiting for? Let's make it happen. All right. So first one, Cisco, got in at 55.01, and it's currently at 55.27. Now, with that being said, I will definitely add to it if we can hit 55.77. And this one's been looking really strong, right? What you want to see on a stock is the moving averages basically splitting apart, finding some room to grow. And that's exactly what Cisco's got going on here today. Smash the like if you have Cisco, if you like Cisco. Next, let's go to Fastenal. Key point on Fastenal right now. This is in the industrials sector. They have been trending sideways for a couple of days. Got in at 54.07. Like we talked about just a second ago. You want to see those moving averages split apart. It did have a dividend yesterday, but it was like 6 cents, so it really didn't have an impact to the price. But what's key here is that it was basically unchanged on the day when the S&P 500 was down, 76 basis points. So when the market was going down, this was staying strong. That's a real key, right? You want to be in stocks that are A, moving faster than the market, and B, not being affected whenever the market does start to turn around. Smash the like if you have Fast or if you like Fast. We did get some comments. Mike. All right, we'll take a look at Verb in just a minute at the end. Thanks, man. Appreciate that. All right, let's go back over to here. PEG, P-E-G. So PEG, actually, I saw this a little bit ago. Morgan Stanley maintains overweight or lowers its price target to 71. You know what? I got it at 62, and I'll be looking to add more at 63 and 64. So if they lower it to 71, hey, we're going to be doing pretty good once it hits that point. One thing to keep in mind with PEG is the fact that there are earnings coming up in about a week. Also, you're probably wondering what this blue line and shaded cloud is out here. That's our back-tested results, right? That shows us that there is a higher than normal probability that this is going to continue on. This shows us basically the positive expectation that you want to see whenever you are getting into a stock, right? Smash the like if you like PEG. How many likes are we up to now? I have no idea. All right. Let's move on to the next section. Oh, be sure you are adding into the chat some of your chart requests. We're going to move on to the next section, and this is the new trade ideas. All right, so let's talk about some of our new trade ideas. First, let's talk about Apple. Apple just had earnings. I know you guys are coming over from the Apple earnings call stream, and Apple's hurting, right? So looking at the Apple chart, just plain, right? What does this tell me? I'm not trading it, nothing like that. It's not super strong, right? You could call this resistance over at 150, but what I can call it is just the trend is not pushing through. In fact, let's do a quick back test. So if you don't already do back testing, I highly suggest that you do. I do really simple back testing, mainly if it's over the 5-day or the 10-day, something similar to that. That's really where I keep it in my ballpark, because the 5-day and 10-day are just the simplest measures of a really strong trend, right? So let's do a back test on the 10-day. So essentially, anytime it's over the blue line, enter the trade. Anytime it closes below the blue line, close the trade. I have no idea what these results are going to be, but I'm not surprised, right? You look over the last 1,000 candles, every time it's gone above the blue line and then closed below the blue line, your performance has been 225%. Now let's do that with the 5. Test. 223%. These are huge numbers here. And actually it's really cool because it will show you your entry and exit points, right? So here's an entry point, entry point way back at June 14th. And then the exit point was July 19th. And that made a 9% return during that time. This is the exact reason why we do back testing, so we can have an expectation of what it's going to be. Now, also, I'm really glad that this happened because it helps point out the illustration that there's nothing guaranteed in stocks. You know that, right? Smash the like button if you know that. There's always a chance things are going to go the other way. And you have to be prepared for that. You have to size your risk appropriately for that. So if you went all in on Apple and you got decimated after this earnings call, sorry. I mean, those out of the money YOLO calls aren't going to work out today. However, if you had a long-term plan, if you were maybe even trading along this blue line, you still should be okay. So let's move on to the utility sector. We talked about that just a minute ago. Let's go to XLU. XLU had a monster day today. So this is utilities, right? Utilities are boring. Nobody wants to be in utilities. Smash a like if you trade utilities today. But it has really turned around, right? We hit a high back on July 16th. Today's the 27th, and it's overtaken that high. Plus, the moving averages are spreading apart, and this tells me that this trade has some legs to it. The whole sector, utility sector, we just saw that a little bit ago over using the FinClub data. That's the highest sector amongst everything. And you can look right on the chart and see that, it is blowing things out of the water. It's up 1.2% while the SPY is down 71 basis points. And I was on Mitch's stream earlier and I was saying, hey, you know what? Take a look at utilities. Utilities are contra to the SPY. Whenever utilities are going up, the SPY may be going down and vice versa. Let's take a look next. Smash the like if you like XLU. Let's go next to AEP. Now, this is not one I was in today, but it was one I was eyeballing real hard. If you take a look at it, it's also got really strong momentum behind it. It is pushing up through all those moving averages. Plus, on top of that, you've got the moving average spread apart. Let's do a real quick back test on this. You know what? That would have stopped me right there in my tracks. The reason being, I didn't even realize this was unplanned, was that there's a negative 13.94% when you run on the 5-day. Remember, the 5-day is the gray lines there. What does that tell you, right? That tells you that there is a negative expectancy with this trade. So if you put this trade on over and over and over and over and over, you're going to expect to lose money. So that's not a trade that I would be wanting to take. And actually, like I said, I hadn't planned on discussing that. I thought this was a pretty good idea. But if you are interested in AEP, or maybe you're trading it, smash that like button. And then finally, let's go to Pfizer. This is one actually I closed today, but it's still looking really, really strong. So there's a lot going on here, right? So I got in at 41, added at 41.66. I would have added more at 42.31, but there were earnings. Now, actually, I wanted to talk about earnings for this. Do you trade earnings? Do me a favor in the chat over there. Tell me if you trade earnings, because this is not something I do. But with that being said, the earnings were looking, or the price was looking really strong in Pfizer, and there's every chance that this could continue to go on forever. We can look at this back tested cloud over here and see it might even hit like 44, 45. The issue came when you look at the options prices, and I did prepare for this. So I took a screenshot of this in my platform before the market closed, right? The easiest way and the way that you come up with the expected move for the earnings trade is you take 85% of the at the money straddle, and that is your expected move. So the way you find a straddle is you buy both the ask on the calls and on the puts. So if we add that up, that comes up to $1.28. Okay. $128 on one lot. That's not too bad. But what does that tell us really? The price at closing was $42.10, and we can add or subtract 85% of that 128. So let's do that. 128 times 0.85, $8. So that tells me that the expected move for Pfizer is 42.10 plus 108 up to 43.18. Let's mark that on the chart here at 43.18. And then go back over here. Subtract 108, 42.10 minus 108, 41.02, which is actually the line where I got in. So let's go over that real quick again. The way that you calculate the expected move is you buy both the call and the put at the money. The sum of that is 128. Then you take 85% of that sum, and that will give you the expected move. So let's highlight that on the chart. The expected move is everything inside this purple box. Now remember, I got in at 41.01. The lower bound of that was 41.02. The upper bound of that is 43.13. And the trend is up. To me, this is a great setup if you're going into earnings and you want to play it long. I, however, did not. The reason being is that I was watching the 5 exponential moving average trend line, which I'm going to draw a circle on it, which was right there, okay? Now you can see that the expected move says, hey, this is going to have a very high probability. I mean, it's as likely to go up as likely as to go down here. There's a chance that it's not only going to go through the trend line that I'm following, but also blow it out to the bottom and then take my profitable trade and just throw it away. I don't want to do that. So I took my money off the table and I said, this is where I draw my line in the sand. I'm not going to trade the earnings, and there we are. It looks like after hours it may be up, and I'm okay with that because this was my trade that I wanted to make the entire time. That was my plan, and that is key whenever you're trading, is having an unbreakable trading plan. That's what I tell people all the time. Hey, do me a favor, if you're enjoying the back testing, smash like, because this is how my brain operates. I can't draw lines on a chart to save my life, but I can back test all day long. I am a data-driven guy, and this really, really works for me. All right, I see some comments coming through. Do me a favor real quick. Start putting in your audience requests. We'll go through that. And smash the like button. And next is the audience request section. All right, so we talked about what's in my portfolio. We talked about a few trade setups that I was looking at today. Now I want to get into some ideas that you guys were having. I saw one from Mike. Pop that up on the screen. Verb. Let's take a look at Verb. Literally, I've never looked at it in my life. Verb Technology. Yeah, let's take. Oh, okay. So this is a range from 397 down to a recent low of 217. Mike, I got to tell you, this is not one I'm excited about, and we'll talk about a few reasons why. Number one, the current price is below your 10-day exponential moving average, your 5-day exponential moving average. What does that tell us? That tells us that over the last week and over the last 2 weeks, people have been selling, which is very obvious here. But it also means that people aren't buying, right? It hit a little bit of support down at this 20, but I'm not convinced that this is going to continue on. Let's do a quick back test here on the 5-day exponential moving average, which is the gray line right there. And actually, this does perform well. It looks like there was something going on back here back in April and May that caused some really strong price moves. And then let's go to the 10. And that's the blue line on the chart, right? The idea here is just to go above or below the blue line. Test. 21%. Huge difference, right? 139% versus 21%. So is this a trade I would be interested in making? Not really. It may be if it can go over the 5. Right now, it's not over the 5, right? The 5 is up at 247, 248. It's down at 239 right now. There's a chance it might be there tomorrow. But if it closes above that 5, there is some back-tested oomph, some back-tested power that shows that this could go somewhere. So you know what, Mike? Hang out for a couple days on that. I would be interested to see how this plays out. If you found that helpful, do me a favor, smash the like button. You've probably heard me say that enough times now. All right, so let's see who else is in on the chat. Knock. Oh man, I traded some knock earlier this year. Quentin, thank you so much for talking about knock. And in fact, I'm looking at the chat here. Thank you everybody for putting in notes in the chat. Let's take a look at knock. Probably even has my notes still back from when. Yeah, I traded this one way back when all that Wall Street bet stuff was going down. Let's see. Yeah, I traded it. Yeah, here's that spike right there. Yeah, I caught the backside of it, so I didn't do so great. I did really good on AMC and did poorly on knock. With that being said, oh, there was some unusual options activity. Let's take a look at that. Some bullish call buying at the $6 strike price. We're not quite there yet, but there's a good chance we might be. How are we doing on time? 21 minutes. Hey, we got tons of time. This is great. Thought we'd run out of time. Mitch was talking to me earlier. He's like, Chris, you got to pull in your show. It's too big. There's too much. I think we're good here. All right, let's do some back testing on knock. Right now, it's a little bit below the 5, but it is still in an upward trend, right? Whereas just a minute ago, we were looking at Verb. Verb was in a clear downtrend. Knock is in a decent uptrend, actually. So let's do a quick back test. It's above the 10 right now. You know what? It shows a positive return, 9.4% or 9.14%. Here is the results, right? It actually crossed it at this point on July 14th, I should say closed above it at that point. And so this is where the, you could call it the trajectory could have shown going forward. So it could be as high as 620, 640, 660, something like that. But we aren't seeing the power behind it just yet. Now, with that said, this was backtesting on the 10-day period, and it's still above that 10-day. So anything can happen. But we're coming into earnings, and just remember, we're coming into earnings, anything can happen. There's as likely a chance it'll go down as it'll go up. Personally, if you were in knock and it looks like you may have been able to eke out a profit on this, Quentin, I would go ahead and keep my profit and move on to something else. Because right now with the volatility and the overall market, plus this being one of those Wall Street bet stocks, I mean, for me, I always like to cut my risk a little bit tighter than let my risk run a little bit further. All right, Yusuf, hey, how's it going? Appreciate you coming on. Let's take a look at WPS. What's WPS? Oh, this is trending super sideways. Look at that. You don't see that very often. I mean, this has basically been going sideways from here to here. What is that? June 2nd to July 27th. But it is, I mean, currently it's like right on all of its moving averages. I would be interested. It's still above its 50-day. I would continue to watch this one. If it starts to turn around and go up, there may be some good chances behind it. All right. Oh man, we got a ton of chat in here now. Thank you guys. I appreciate you doing that. Do me a favor, smash the like button. I see that we got a lot of viewers now, so thank you for coming on. Hang on. Let's go through these real quick. Got to scroll up. I'm so far behind. So thoughts on Amazon? Let's take a look at Amazon. Bobby, thank you so much for that. Ooh, Amazon. Oh, yeah. They have earnings in, when is it? Tomorrow? 2 days. Yeah, Amazon, it's such a big stock, right? It's $3,600. I mean, there's a chance that it could be at, I don't know, $3,500 by the end of the week. This is definitely one I would skip this one just because it is so huge. Unless you're playing it really tight with really close stop losses. I mean, it's moving sideways. And it doesn't have that oomph going into earnings that I would be looking for. So I'd be careful on that one. UL, Eric, let's take a look at UL. Oh my, what happened here? Banning Ben and Jerry's and Unilever. Well, I don't know why they would do that. Yeah, that's coming from the news article here. Florida, Texas. I live in Texas, by the way. Banning Ben and Jerry's and Unilever. Well, that's a terrible idea. I love some Ben and Jerry's. Why would they do that? That must have been the news that catapulted it down. Yeah, this stock's hurting real bad. I would be interested if it could at least cross the 200-day right now at 58.58. That's at 56.47. I'll tell you what, if you're a dip buyer and it curls that dip back around, you know what I'm talking about? I think this does have a chance. I mean, it's a solid company, Unilever. It's not like an itty bitty like penny stock or anything, but it is below its 200-day. And just at the onset, you can look at a 200-day line as like the easiest line in the sand to say if something is above or below, if it's bullish or bearish. And this has got to cross 58.58 before I'd look at it. But this actually might be taking another look at that again once it does get some movement behind it. Thank you so much for that, Eric. Let's look at SMSI. Man, you guys are loading me up here. I'm so excited. SMSI. Smash the like button if you don't mind. I appreciate it. Let's try to get to 100 likes. That would be awesome. This is my first broadcast on Benzinga. They need me to bring the likes. I'm sure you figure that out by now. SMSI. What happened here? Share spike higher on volume. I mean, there's no like news driving anything. But yeah, I mean, it went, what's the percentage change here? 640 down to, dude, it lost 17% in the span of a day. Yikes. I mean, if you really enjoy some volatility plays, this could be a great one for you. But yikes. For me, I mean, it's such a low price stock too. You could load up on this, but that could be your detriment, right? Buying 1,000 shares when you really should have been buying 100 because of the volatility here could really backfire. So I would be super careful on that one, Matt. Thank you so much for your comment there. Hell yeah, smash the like. Thank you, Zach. I appreciate that very much. I like your jacket too in that picture. I think we shop at the same store. Let's see. Bobby, we talked about that. Spy. All right. I will do SPY in my closing section here in just a minute. So let's transition to that real quick. This is going to be my final thoughts. All right. So I got to tell you, when Benzinga reached out to me and they said, hey, do you want to run a show? I'm like, hell yeah, I do. This would be awesome. So I really appreciate the opportunity to do this. I have been doing a podcast for a couple of years now. We've got over 500 episodes, 2.2 million downloads, and I'm kind of taking a little bit of a different approach here. And I want to have some final thoughts here. One of them is, let me share the screen. Yeah, we are what we repeatedly do. Excellence then is not an act, but a habit. And it's not to be trite. It's not to be smart aleck or anything like that. It's the fact that you can't have one single trade and be set up for life as a trader. You have to be excellence in every day, right? And what I mean by that is you can't take the best trade you've ever seen. Everything is set up perfectly for you on Monday. And then on Tuesday, just like buy everything, right? Or sell everything or buy YOLO puts, right? You've got to be strategic, and you have to be strategic daily. That will make the biggest difference to you as a trader. When you finally figure out all the ways, like I did, I talk about this on my podcast all the time. I blew up my account twice. And I tell people that I figured out every way to lose money. And then all that was left was how to make money. And then I realized that I needed to repeatedly do those things. So you know what? I am so glad that you tuned in to today's episode. Be sure to smash the like button. And yeah, you've got to develop those consistent winning habits. I'm a huge believer in back testing. I'm a huge believer in options trading. And I'm a huge believer in sharing the good news that we have by being traders every day. And I really appreciate everyone coming on the line today, talking about some of the stocks that you're looking for. This is my passion. This is what I was put on the earth to do. And I'm grateful to be here. So if you are interested, we have a huge library of over 500 episodes over on the 10-Minute Stock Trader YouTube channel. Just type in my name, Christopher Ewell, or you can type in 10-Minute Stock Trader. The podcast is called How to Trade Stocks and Options. And you know what? Like I say, I share all the time all of my mistakes so that you cannot repeat those and hopefully not lose the money that I did. I call it the Wall Street tuition. So, hey, listen, thank you so much for tuning into today's episode. I almost said tuning into today's podcast. Really appreciate it. Hit the like button. We got to get to 100 likes. They told me that, or they're going to cut me. I don't know where they get their knives from, but I heard that they're coming, and I don't want that to happen. So please make sure you smash that like. And you know what? Thank you for tuning in. We'll see you on the next episode.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance,